Yeah, so these were big beats on EPS and on revenue. To look at the cloud service, like you said, Aliyun was up 59%, which was a huge beat. Commerce was up 34%. Tmall was up 27%. And as you said, total revenues were up 34%, Michelle. But what really stuck out to me is if you look at new mobile users, we're up 28 million users, taking the count to 874 million mobile users now. And the annual active customers were up 16 million, taking the total annual active customers to 742 million. So Alibaba is really firing on all cylinders right now, and there's tremendous opportunities between the Ant Financial IPO and between growing the gross merchandise value by mid-teens over the next 5 years, compound annual growth rate. So a lot of things looking positive moving forward, Michelle.
As you mentioned, there's been a surge in mobile users. Is that an indication that consumer confidence is rebounding, or is it simply because of the pandemic, and will the trend reverse once the pandemic is behind us?
Yeah, I think what you're seeing, and the CEO shared that particularly in commerce, the business has now recovered to pre-pandemic levels. So China went into the pandemic first, and they've come out of the pandemic first, and I think it's very auspicious for the rest of the world to see these levels for Alibaba recovering, to see the consumer confidence coming back. They're getting online, and certainly some of the bricks and mortar business, of course, is moving online because of the pandemic, so they've been a beneficiary of that. But overall, the general sentiment and the business and the gross merchandise value is growing, and that's what's important for the long haul.
Now let's talk about the risks that Alibaba is vulnerable to given the rising China-US tensions.
Yeah. So I think when you look at Alibaba's revenues, international is only about 10% at this point. So while on the one hand it's a risk because the U.S. administration has certainly indicated they have some concerns about consumer data and customer data moving forward, I think it represents a very small part of Alibaba's present business, and the opportunity for growth domestically is just tremendous. I mean, if you look at your cloud service business, the Aliyun, basically today it looks like Amazon Web Services business did 5 years ago. If you look at the size of Amazon Web Service, their cloud business, it's bigger than the total of Alibaba. So if you consider that Alibaba's cloud business is now growing at such a fast pace, 3 times its developed market competitors, where it could be 4 or 5 years out at that growth trajectory could just be tremendous following Amazon Web Services model.
That's very reassuring. Now, what about the U.S. Recently said that it will force Chinese companies to delist if they don't comply with audits by the end of 2021. Is that something that a giant like Alibaba should be worried about at all?
I think yes and no. On the one hand, if they have to delist, they'll just relist in Hong Kong or dual list in Hong Kong, Shanghai. So so long as the underlying business is growing domestically and somewhat internationally, which it is in leaps and bounds, whether they have to relist in another jurisdiction is of less importance. Obviously, it's nice to be listed on the New York Stock Exchange and have those capital markets available, but this administration wants Alibaba to follow the same audit rules that all of the U.S. companies have to follow. So Alibaba may make a decision that we want to follow the same audit rules and stay listed on the New York Stock Exchange, or they may decide we're happy with how our auditing is done now and we're just going to move our listing to a different jurisdiction. But when all is said and done, is the underlying business growing? And the answer is resoundingly yes.
Well, given how much the Starboard has surged this year, it might not be a bad thing. Now, given the bull run of Alibaba since the start of the pandemic, do you think there's still room for further upside?
Yeah, I think, certainly in the short term and intermediate term, there's always a chance for a consolidation of such large gains. But if you look at the longer term growth prospects, and if you look at the path that Amazon and Amazon Web Services took in the United States, I think there's a long runway ahead for Alibaba and for its businesses in China. Particularly, you have 4 times as many users in which case you can grow revenue per user at an astonishing clip moving forward. So that penetration can be deeper, the growth can continue, and the opportunities of businesses moving online from offline represents a further tremendous opportunity for Alibaba. So I think for sure in the long term it represents an opportunity. In the short to intermediate term, that's just a vagary of the general markets.
Great stuff. Thomas Hayes, Chairman and Managing Member at Great Hill Capital in New York. Thank you so much for coming on the show. We appreciate your time.